Hi guys, sorry about yesterday's recording with the black screen. I'm not sure what happened there. Hopefully today that doesn't happen. Um, but yeah, the volatility is back with a bang after the market's sitting and waiting for 2 days, pretty much just trading sideways for 2 days. We get the inflation. Now there's a couple of stories around this I want to discuss. Is that yes, inflation is a little weaker. So the market expected, oh well, interest rates are going to be heading down. Well, that's not the case, right? But it's still well above the 2% figure, right? Now the Fed do meet in June, and we'll get another inflation print before that. But the fallout of overnight pricing is that the market is now expecting the Fed to not raise rates, that in the June meeting there won't be another rise in rates. The stock market is looking beyond that and saying, well, we're expecting rate cuts and the market and interest rates to be coming down, but that's not happening either. Right? So the Fed will effectively pause for the US summer as they continue to monitor the effect that the interest rate rises have had on inflation, plus the banking sector crisis that was happening February, March this year, is still flowing through the market and tightening financial conditions and tightening lending because there was a run on the banks and cash disappeared out of banks. So that lending cycle of banks to businesses is tightening anyway, which is deflationary in itself. So the Fed's going to be sitting on its laurels for the next, certainly for the next meeting and maybe the meeting after that in August, as they watch what happens with interest rates at 5.25% and inflation coming off, seeing if the banking conditions will do the job for the Fed themselves. And so we're not going to get any, I don't think we're going to get any rises in the next meeting, but we're certainly not getting rate cuts. And the fact that the stock market thought that, well, the stock market I think is a bunch of fools anyway. They're always way ahead, trying to front run actual reality. So let's go and have a look at price action, and we can see that in the stocks here. This is the stock market 500, right? So inflation comes out, it's 4.9. Yeah, beauty. Let's get busy, and then it's a wake up to reality that hey, inflation is still quite high. And then some Fed member came out and said, well, we won't be raising rates. We won't be cutting rates. Well, that was obvious, but so a bit of a bounce, what they call a pump and dump, and then pump again. That's volatility for you, right? And we haven't had that for the last couple of days, thanks to so the last couple of days pretty quiet, and then we get this extreme volatility around news. Over in VIX, obviously we see the euphoria, no fear, then maybe there is some fear, and then no fear. So, and we come down to bonds, and this is where the smart money is, and interest rates, as we can see, are starting to weaken. That's not to suggest, I mean, this is the 10-year bond. If you look at the 2 years, still floating around that 4%. But the 10-year bond is obviously 10 years' time, with the idea that interest rates are going to be coming down, not this year, but at some point next year, they might interest rates might start to fall. So that's bonds, and then the dollar index. Why do we need to hold US assets if interest rates are coming off? And if interest rates are coming off and stocks are doing well, we don't need the safe haven of the US government securities. And so the US dollar weakened. I don't know how much longer that's going to last, because if the US economy starts to pick up, then people will want US assets again. So that said, it's a little hard to see what's going on when you've got the 4-hour effectively in this kind of range. Quite a large support level here, as we can see. I'll sync that across all charts. We can see that support level there for it around the 100.5. Yeah, it's a little difficult to see where it's going. I would suspect that we'll get a bit more sideways action until something the next shoe drops, which makes it hard to say where the euro's going. You know, on that it looks a little bullish, but again you got that 4 hour just sideways. So until it breaks out of that, I wouldn't be confident in choosing a direction on it. Pound, well, that failure again, did have a little pullback. I did want to see it pull back further so to have the strength to get through it. Such a shallow pullback doesn't really give you a lot of strength to push through such a what's now becoming a heavy resistance level. Sellers lining up at that point. It'll take a pretty weak US dollar, to my mind, to try and get it through that level now. Yeah, I just don't see it happening. And I saw a comment somewhere that the BOE, I think it was Deutsche Bank, are bearish the pound and expect the BOE to have a surprise announcement this evening. So I think that'll be the key thing to watch, is what the BOE do. They're expecting another rise of up to 4.5%. If that comes through, it'll be what Bailey says afterwards, and kind of what the vote is. 7-4-2 against. If it's a bit closer in the votes, then that might spook the market, and you'll see some selling in the pound. So that one, yeah, I'd wait until the BOE tonight. Aussie dollar, that 68 handle, tested that over the US figures. The round numbers, the Aussie dollar loves round numbers, but now it's kind of in a range, and the Aussie dollar doesn't normally do ranges. Aussie is one of the most trending currencies around, but to me it's stuck in a range. So looking at that, you would expect it maybe to come back across the range. Again, it's coming back to that US dollar and the lack of direction there, or the lack of commitment to a direction, makes it hard. We had our budget, bit of a non-budget really. It's an inflationary budget. It's actually a Liberal budget, not a Labor budget, i.e. the rich get richer and the poor get peanuts. Quite literally, and the middle class continue to struggle. So it's more of a Liberal budget than a Labor one, and so more of a right budget than a left. For those of you who don't know Liberal and Labor, yeah. So I still don't have a reason to buy Aussie unless China's going to go gangbusters, and the only thing China's sort of gunning for is to own Australia, either financially or militarily. So yeah. Then what do we see here on the yen? It was looking strong. It was looking pretty good. People are starting to buy yen instead of US dollars. So again, I don't, with the failure to carry on like that, it could go either way from here. So a tricky time ahead, I think. Wish you all the best. Trade accordingly.